Okay, hello, Eric. Hello, everybody. Welcome to the Monday night chart chat, where we talk about stocks which right now are ready to break out. These are momentum stocks. Normally, we talk about usually the micro cap, the penny stocks. Sometimes we mix in some of the bigger names, but right now I'm going to be talking about some of the meme stocks, because these things are actually pretty hot right now and they are leading the market. I'm going to be looking at 5 of these, maybe 4 or 5 of these: ARK, Tesla, Palantir, AMC, GME, Gamestop, plus a couple of oldies but goodies, CloudMD, and a couple of other interesting stocks. And of course, we're going to be talking about some of our penny stocks, which have that 10x to 100x, as we have already seen. Before I even get started, read the disclaimer below. None of this is a recommendation. These are all high-risk stocks we talk about. You could lose all your money. Do your due diligence, et cetera, et cetera. The micro-cap companies we talk about are clients of Wall Street Reporter, so that could be considered paid content. But obviously, ARK, Tesla, unfortunately, they're not the clients of Wall Street Reporter yet. Neither is Palantir. But with that said, let me get started right here. Let me just change up this banner. And by the way, we have a new live stream coming up, July 20th, very special live stream we're going to be talking about later. It's our baby unicorn stocks live stream, July 20th. We're going to introduce 4 companies, interesting low price stocks, micro caps, which could be interesting. One of them we might end up as one of our next super stocks, maybe not. But you will vote. There'll be actual voting in the webinar. You can vote, and then you can choose, and the winner, the companies which get the high ratings, could move on to become a next super stock, and could be like one of these stocks that we have had in the past few months, which have increased 15x, 20x, 50x, 14x, a whole bunch of 500% gainers. I don't understand why people are so excited about some of these stocks, like I don't know, GameStop, whatever. I mean, God, we've had stocks that are up 20x. Anyway, let's dive in with ARK. ARKK. Again, this is kind of a bellwether for the speculative space. If you recall, a couple of weeks back in our live stream, I said that ARK was breaking out, taking off. I haven't looked at it in a while, and this thing, it looks like it's kind of on fire. I mean, it's a little bit I would say this is like, it's almost going parabolic right now. It's a little bit, I don't like these type of gaps. I mean, this thing is, because it doesn't have that stability. But it looks like I'm pretty sure we're going to close this gap of 150. So ARK is looking good. We could see new highs on ARK. It's very possible. But let's jump into a stock we have not looked at in a long time, Tesla. And here we go. Tesla is, I believe, in a renewed uptrend. We are now continuing the uptrend that started really back. I mean, the parabolic phase started in November. We talked about this way back when, one of our first live streams, ChartChat live streams. And let me just pull this off over here. Let me go back to that chart of Tesla. Yes, so we've had a consolidation in Tesla for how long? 1, 2, 3, 4, 5. Roughly 5-month consolidation in Tesla. And right now we've formed a pretty decent base, kind of in this 580, 600 range. And I mean, this thing looks like it's about to explode. Again, I'm not a fan of Tesla in any way, shape, or form. But this is this thing looks like it's about to take off right now. I mean, this is like yeah. Let me look at a closer chart. Let me look at the 1 hour chart. So yeah, this thing is on fire. Okay, so your next level of resistance is going to be that 750 range. Once Tesla gets above 750, I think we're going to see new highs of 1,200, 1,500 plus. That is, I think, what is going to happen. Why is that important? Why are we talking about Tesla? Why are we talking about these meme stocks? Because, you know, really these are kind of the bellwethers for the speculative space. Now, the penny stocks, the microcaps, have been in a bear market since February. Really since February. Some of them are starting to bottom out. And we're starting to see some momentum happening. I think we're going to see things really pick up, and we're going to probably see a lot of these things back in full bull mode by September. But I think these meme stocks are kind of leading the way right now. So Tesla looking amazing. We're going to see, I am absolutely sure we're going to see new highs on Tesla. Let's take a look at another fan favorite, Palantir. Again, not a client of Wall Street Report. I don't know why these companies like a Palantir would not sign up, you know, to present at our next super stock live stream, because this actually, well, it's already a super stock, so it's kind of disqualified. But Palantir is in full bull mode, breaking out of the trading range over here. This thing also has been, like many of our penny stocks, in a trading range. As you can see, made a new high in February. Actually, yeah, early February. Most of our stocks peaked in Valentine's Day. This thing peaked in early February. 1, 2, 3, 4, roughly a 4-month consolidation. So you've seen the larger cap stocks consolidate 4 months. A lot of our stocks are going on 4, 5, 6 months. Anyway, this thing is just breaking out of this. Okay, you had a resistance really at this $26 range, and it is clearing right through there. I think we're going to see some minimal resistance in the 30s. This is a stock probably is going to be $60 by, I would say, high 50s by September. I think this Palantir could easily double here. By the way, if you want to get in on the next Palantir, potentially the next Palantir, click the link in the video description below to sign up for our Baby Unicorn Stocks webinar July 20th. You can get on the ground floor of some stocks which are not $20, not $50, not $700, but I mean, we're going to have some 5-cent stocks, 10-cent stocks. And I think some of those stocks can probably double within a week. Again, many of the stocks we introduced in November, December, February, January, a lot of those things doubled, tripled within a couple of days, which was, I believe, Liquid Avatar was one of those. Let's see here. Trip also, we're going to be looking at the Trip chart in just a moment. TBPMF. We'll talk about some of the medical stocks. Okay, so Palantir looking great. Now, if you like Palantir, if you're into the tech stocks, you might want to check out VSBY, VSBY, also a big data company. This is one of our clients, next super stock client, VSBY, looking really good. I think we're going to be, it made a nice base here in this kind of 50-cent range. Probably going to break out of here, the 50 cent. And next target on this is going to be 17, probably in the $1.50 range. Mid-August, I would say, possibly September. So you're looking at a double or triple right here by September. $1.20, maybe $1.50, and then we'll see what this can do. Let's take a look at, so that's one of our big data stocks. PLTR looking amazing. Now let's take a look at one of the craziest stocks, which I think is a complete scam. I'm not saying it's a fraud. Well, I'm not saying it's a fraud. I'm not saying it's a fraud, but I'm sure. I think they're gonna. I don't know. I think they're going to have some issues at some point with a couple things. I don't know. It's just something. Something about this thing. It has a bad smell. Like, I'm not saying anything. This is just. I think this thing just gives me a bad vibe. AMC. I think this is going to break out to new highs. Forget about the fundamentals. I mean, this company is in the movie theater business. I mean, movie theaters are basically, it's pretty much an obsolete technology. It's almost like, I don't know, like, I don't even want to say like a libraries, but, movie theaters. Why would, it used to be a movie theater. You had to go because there was no other way of seeing a movie. There was no TV. And you didn't even have, this is in the 1920s, they didn't have a TV. In the 1990s, you didn't have high-def flat screens. Even in the now you can get a flat screen, I don't know, 10K, whatever, incredible resolution, couple $100, and you can sit on your couch. People are lazy these days. They want instant gratification. Why would they want to go to a movie theater, especially if, I don't know, if you live in the suburbs or whatever? You got to find parking. You go there. You got to pay. I don't even know how much how much is a ticket these days? It's got to be like, I don't know, $20 now. I have no idea. I think the last time I was in a theater was a couple of years ago, and I think it might have been $14. It was something crazy. I think theaters are pretty much obsolete. People want instant entertainment. The trend is really towards direct delivery, D2C, direct to consumer, streaming. That is because, look, Hollywood wants to make money. They want to capture as much of that margin as possible. Why do they want to send you? I guess they don't have reels anymore. I guess it's digital, but why do they want to deal with theaters? It's really obsolete. It's going to be pretty much for. The only people you're going to see at theaters is going to be like poor people who can't afford a TV, who are homeless. Or you're going to see homeless people. Here's who's going to be in theaters: homeless people, poor people who don't have a TV. Which is, I've seen homeless guys on the street with, they got the iPads. It's going to be pretty much homeless people who are going to be in theaters on, like, during bad weather. And what else? And I don't know. People are going there for what? Think about it. What were it's almost like they had those adult theaters. Back in that porn theaters. People would go there to do who knows what with who knows who over there. I think that's pretty much what movie theater is gonna devolve into. It's gonna be like degenerates. Homeless people, that's pretty much what you're going to see in movie theaters in a couple of years. But in the meanwhile, and then you're going to have AMC, they're giving, what is this guy giving out free popcorn if you're a shareholder? Some nonsense like that. That it just sounds like a little bit too much. Anyway, so this stock, though, forget about the fundamentals. The stock looks amazing. We're building an incredible pennant here. And we're probably going to break out of this pennant. I'm going to draw you this pennant right now just so you can see what I'm talking about. I hate this company, but I'm going to do this just because I'm doing this just for you. There we go. And then we'll make another one here. Like that, that's kind of what it is. So once the stock breaks $60, I think you're going to see a run to how much? North of 100. I think this is could go crazy. I think this could go to could go. It might go to 180. But this thing easily, once it breaks out of this pennant, is going to go north of 100. It's going to go bananas. Is the company have anything going for it? I don't know. But yeah, this is this great looking chart right now. Now, you want to see another great looking chart, but you want to get it. How about, do you want to get on the ground floor of something? Forget why would you want to chase these stocks which could implode in theory? I'm going to show you one in just a second, but first let me show you GME, Gamestop. So we got AMC and Gamestop, and Tesla, the three horsemen of the apocalypse. I mean, I think the market's probably going to implode by October. It's going to just go make new highs, go crazy, go parabolic, and then there's going to be a meltdown. But until then, there's an opportunity to make money. GameStop, what are we looking at here? Daily. GameStop. GameStop, I got to tell you, is actually, it's actually looking pretty decent. It looks like it's almost kind of like it's been holding its own. As long as, look at this moving average here. Pretty much, this moving average is the key thing. This is a 50-day moving average. As you can see, every time GameStop breaks above the moving average, the thing takes off. You had a bit of a fake out over here on April 13th, back, broken up above it. As long as it pretty much stays significantly above it, I think this thing is in good shape. It's probably gonna, it could probably hang out in this 300 range for a while. I can't even believe the stock is so high. Yeah, 200 in 300 range. I think it could hang out in that range. I think when was the live stream we said this is could go to 3? Yeah, it was right here. It was this day. Back in January, I said, hey, this thing is going to double. Of course, it was impossible to trade. I don't know if anybody was able to get in on that, but yeah, but here it is. GameStop, amazing. However, what about a ground floor opportunity in a stock that is in the video game space and ready to triple? ESE, ENTEF is the symbol in the US, ENTEF, ENTEF is the US symbol, ESE for the Canadians in the audience. Before I get into that chart, make sure if you're brand new to our program, visit wallstreetreporter.com for all the latest news, videos, live streaming, all the good stuff. And make sure you subscribe. You click the link, the dislike, the like button to subscribe to the channel. And of course, none of this is a recommendation. We're also on Telegram, Twitter, all those social media things, especially Telegram. If you want to follow sort of our chart commentary throughout the day, click the link in the video description below for our social channels. The Telegram thing is free, and we've had a lot of good stuff on it. And of course, make sure you join our Baby Unicorn Stocks webinar, July 20th. We're going to be introducing you to 4 stocks. Could be one of them could be our next 10-bagger. One of them could be, hey, 20x, 50x. And one of them, we're looking for that first 100-bagger. Could be one of those stocks. Anyway, back to ESE. This is a stock we introduced way back over here. I think it was 25, 30. It was basically 25 cents when we announced it. By the time they did the webinar, it was, I think, 35 cents. This thing just exploded. It's never looked back. So let's say 35 cents, okay? Let's say you got in this on 35 cents. It hit a high of 450, a little bit over 450 in March, early March, just like Palantir. Wow, amazing, all right? Symmetries here, Palantir. And now you've had a consolidation. They did a capital raise. These capital raises in Canada are horrible for companies. It really derails all these stocks. Anyway, you had a consolidation for March, April, May, June, almost 4 or 5 month consolidation. Finally, it looks like it is ready to break out. We closed above the 50-day moving average. Again, just like GameStop, the moving average here is very important. It's been very accurate. As long as the stock was above the moving average, the trend was your friend. It was going up. As soon as it broke the moving average, pretty much that was your sell signal. And today is the first day the stock closed above the 50-day moving average since, really, I would say officially, I would say legitimately, this would have been it right here. So that would have been March 26th. So I think today is actually a very important day. Incredible chart action. Look at this. Volume has been increasing. The pattern, that chart pattern, beautiful, beautiful setup. Beautiful, fantastic setup. It really, I mean, it's a classic. This is like a classic bullish pattern. Here's the 1 hour chart. As you can see, it started to take off. Look at the volume picking up. Head and shoulders bottom, picking up. $1.60. Again, this is the Canadian chart. ENTEF is the US symbol over the counter. Again, this is a very, very thin stock. I think they're closing their financing this week, next week. I mean, once they close that financing round, I think this thing is going to be ready to move. They have an acquisition that they're closing right now. I think they're probably looking at others. I mean, the CEO said he's looking to do 100 million. He's looking to pick up 100 million in revenues worth of esports acquisitions. And if he does, that would be $1 billion company. Take a look at EGLX, very similar EGLX. Again, EGLX is just a penny stock, just back in November. $1.30, hit a high of $8. So can ESC do that? I believe it can. Again, this is of course a client of Wall Street Reporter. I think we're going to see $4 or $5 on the stock within 4 to 6 weeks. By the end of the summer, by September, it's going to be probably $4.50, $5 plus. And then we'll see what happens from there. So that is ESE. Let's take a look at a couple other charts here. Let me catch up on our comments. TBP, good question. TBP. Let's take a look at TBP. TBP, you know, it's in the last couple of days, it's been kind of, it's been sort of like, yeah. I mean, it looked like right here it was going to break. It had this gap. Then it kind of, you know, the air kind of went out. I don't know why. It's dipping below this moving average here, where you've seen kind of fake outs here, but it really needs to maintain above 30, this kind of 32-cent range, which I think it will. I think it probably might dip a little bit lower, like in the 30s. You have a really great, I mean, before that, you had a really great chart pattern here. I mean, really, like right here, June 18th, June 19th, it looked like it was going to blow right through 50 cents. Somehow the air kind of went out of the bag. We see this happening a lot with some of these micro caps. So the setup, it is not in bull mode right now. So it's kind of, I want to see this kind of find a base, probably in the 30s, might dip a couple pennies. But you never know. I mean, let me look at the 1 hour chart. Yeah, I think we're gonna test like 32. I think it's gonna go to like 32 cents before it resumes the uptrend. And then again, it's forming this pennant here. I'm going to draw you this pennant, very similar to the AMC pennant, but better. Let's see, what color should we make this? Green. This is kind of, I'll do it like this basically, but it's the other way. Okay, you got a pennant forming here. So the stock needs to kind of break out above 37 cents. Really, you got to watch this 37-cent level, 38, 37 cents. Once the stock clears 38 cents, I think it's going to make a run at the 50-cent range. So, and it could happen any day. This is one of those weird stocks. It could happen any day. Need Sean. Yeah, I agree with this. The trials, the data, they got a lot of catalysts in place. A lot of catalysts, and one of those things could send this thing to the moon. And the moon on this stock is, my target on TBP is I think we could see 250. I know it sounds crazy, but easily in the $1.50 range, possibly higher. I know we have people who are saying it could be $20, $10. Listen, let's see this thing go to $1.50. I think it has a shot of in the 2 range. I think it could spend some time in the $2 range. I definitely think that this is going to be a 10 bagger. So we introduced this Tetra at, how much was it? Was I think it was March when we announced it. Yeah, so I think it was like 14 cents. So you had basically a triple or a quadruple, almost a quadruple in the stock in just a matter of weeks. And that is the reason, if you're not a subscriber to the channel, you should click right now, the subscribe button. And of course, make sure to join our baby unicorn stocks. In case anybody doesn't know what a unicorn is, I'm sure anybody who's watching this knows what these unicorn stocks are. But anyway, I would say, no, let me define it. Okay, so in the traditional, venture capital world, stock world, a unicorn is a company that hits $1 billion valuation. So it's a startup that goes to $1 billion. I would say, for our intents and purposes, in the microcap world, a unicorn would be a little bit of a lower bar, because in the penny stock world, probably I would say 500, 600 million valuation would be considered a unicorn. Between 500 and $1 billion valuation would be a unicorn, because by the time a stock goes to that 500 million, it was already a 10 or 20x. Because usually we kind of introduce them at a 20 to 50 million valuation. That's usually kind of when we find these guys. Sometimes a little bit lower, but usually that 25, 50 million. And then they go up 10x. So that's what we're looking for. We're looking for those 10x to 100x super stocks. So I'm bullish on TBP. I think this is going to be great. Of course, TBP is a client of Wall Street Reporter. Read all our disclaimers below. And let's go to the next potential unicorn. Oh, I forgot. I almost completely forgot. There's a couple more of these meme stocks. Which, okay. I don't even know what this company does. I just see this as like people talking about this now. So what do these guys do? I don't know. Probably they make, dog biscuits. Bullish chart. I mean, this thing looks like it's in bull mode. You have some resistance in this $15 range. And this stock really looks like it's going to probably test that. I don't know if this is I don't know what, I mean, you have a decent bottom here. I think we might see in the 20s, in the low 20s. I think that's probably where this could end up going. Maybe 25. You can have some resistance. I mean, I don't see what the big deal is to make a couple bucks. I don't see that as a good risk reward ratio. The goal, I believe, our goal with the next super stocks, the next super stock live stream, the goal is asymmetrical setups, asymmetrical. So, you risk $1 to make $10, $20. Here, you're risking $15 to make 25. I don't see that as a good trade-off. You got ESC, you're risking $1.25 to make $5. Of course, if you got it early, back in December when we introduced it, you were risking, 25 cents or 30 cents, whatever it was, to make, 250 would have been a 10x, and it exceeded that. It went to 4 and change. Excuse me. Okay, so that is Wish. Sticking with the W's, I want to look at a stock that is not a client of ours, but a related in the medical healthcare space. Well Health. Not a client, with nothing to do with this company. This is a pretty bullish looking chart right now. You've had a consolidation here for October, November. 1, 2, 3, 4, 5, 6, 7, 8, 9 months. It's like having a baby, this stock. So it broke out of its moving average. So it looks pretty bullish to me. I think this thing could go. The key is, will it break out of this moving average? Excuse me, will it break out of this pattern here, this consolidation? If it does, if well breaks out, the target on this stock could be $16, $17. So you could see a double potentially a double. And why are we talking about medical? Here is CloudMD, one of our all-time favorites, a former neck super stock. It became kind of a super stock. It's a stock that we introduced. So they're no longer a client of Wall Street Reporter. But okay, so we introduced Cloud right at the bottom pretty much. I think it was July 30th or 31st I think it was July 30th. So we introduced it at like 60 cents Canadian, and it went straight up like a rocket immediately. As of course, this is what these stocks are supposed to do. When we introduce a next super stock, that's what happens. It goes, usually look, if we're doing our job correctly, which is we get the timing down just right, we get that inflection point. And again, the whole idea of, I'm going to spend some time on this later, the next super, because we have a couple of different platforms. We have the next super stocks, we have the discovery stocks. Now we have the baby unicorn stocks. They're all a little bit different. I'm going to have like a little page set up where I'm going to really explain it all, because I talk about it, but it's never been put down in black and white on a page where you can kind of see the distinctions. There are several key important distinctions. So one of the big distinctions with the next super stock is the asymmetric setup. So we want a situation where really you have that 10-to-1 upside. The stock is 10 cents, maybe it's $1, but the upside is 10x that. So you have a 10-to-1. The other thing is, we talk about, constantly, we're looking for the companies, again, multi-billion-dollar market opportunity that they're going after, multiple catalysts, and the key is that inflection point. This is where it gets tricky, this inflection point, because in theory, when we bring a company onto our platform, ideally, that's exactly the moment or the next week that they hit that inflection point where, they hit that growth curve, the news releases start coming out, all the M&A, the deals start happening, all the action starts happening. Revenues start exploding. Sometimes you get it right, sometimes you don't. Sometimes there's just factors that are, definitely not in our control. maybe not even in the management's control, whatever. But the stocks we've had in the last month or so, usually the companies we've introduced, like the discovery stocks, there's been a couple of misfires, a couple of duds. I'll be very candid, there've been a couple of duds because the companies, they said they were at the inflection point, but they weren't. They might have been a few months out. So the timing is off, and but this definitely was. So we introduced this one just right, exactly at that inflection point. That was Cloud MD. So it went from 60 cents to a high of 320 something. So 5x. It wasn't a 10x. I really believe it could have been a 10x. It was just a 5x so far. And it's been in a consolidation phase for 1, 2, 3, 4, 5, 6. Yeah, again, 9 months. You get a 9-month consolidation. And it's been lagging. It's been lagging well. I think well is considered the bellwether in Canada in that healthcare world. In the Canadian healthcare microcap universe, well is the leader. Cloud is like second, sort of a runner-up. But I believe that this is about to explode. Very nice chart setup right now. They had some pretty good news today. They got their run rate is 100 million plus revenues right now. That's a lot. So they've actually delivered. This company has actually delivered what they promised. It's taken a little bit longer. Sometimes these things take time. They did a bunch of financings, which derailed the stock. They stopped the retail promotion, which I'm not happy about, and that also kind of derailed it. But it looks like it's going to start moving pretty much based on on the strength of the fundamentals, which is what stocks are supposed to do. So I think we are going to see this thing break out. Okay, you're going to have some resistance in this 220 range. I think it's going to break out of that, and then maybe in the $3 range. And then from there, I think we're going to see $5 in the stock. So that is the idea. SLHG. SLHG actually is also no longer a client of Wall Street Reporter. They're on NASDAQ, so they want to do institutional type stuff. The SLHG, I'm a fan of the CEO. I'm a fan of the company. The stock is the chart though right now is not looking good. It broke below this moving average here at 650. Hopefully, I am hoping that it build some support right here. If it does, it might go lower and it could hit $3. Again, this is a reverse. They did a reverse split, so it's kind of one of those things. Yeah. So that's the deal over there. But let's see what happens. It could turn around the next couple of days, and it might go to the moon. But this one is, why am I bringing this up? Because it ties into all these healthcare stocks. Speaking of healthcare stocks, here is it's a weird chart. It's a weird chart, AIML, which is in the health tech space. Just had a great announcement today. They're expanding into the mental health digital health space. They get some really interesting things going on. I think over the next couple of months, I think it's kind of difficult for investors to really understand what the upside here is, because the chairman hasn't really. He's not he's been, I think, pretty this company is actually pretty conservative about promoting their story. They're not saying, hey, this is we're going to build this $1 billion but that's the opportunity they're going after, and I think once investors kind of understand that, this thing is going to gain some traction. The chart is looking pretty interesting. They're going to be on our live stream tomorrow, and talking about the acquisition, some other deals they have in the works. So there could be some interesting things happening. The chart is doing some interesting things. You had a base here at 60 cents. It broke out above this moving average. As you can see, this moving average has been very effective. When the stock is above it, the trend is up. Below it, it's down. So you had this breakout, and it looked here, mid-June last week, like this thing was ready to go to new highs. And then you kind of, I don't know, the buying kind of dried up. With some of these smaller stocks, there's kind of sometimes there's just a lack of certainty of conviction. So you have these kind of trend breakouts, but then they kind of fade because you have retail investors who kind of, they're fickle. So I think that's kind of what happened, but the stock has stayed above the moving average, which is very bullish. I think we're going to see a bullish pattern develop here. We might see a little bit of more of a consolidation in the 70-cent range, but once the stock breaks out above 90 cents, and it can do that very easily, it's a very thin stock, just like ESE, very thin stock. Once it does that, you can see this thing explode. It's only like a $25 million market cap. So, if this thing gains traction, it could be a 10-bagger. So, I think with these Canadian stocks on the CSE, the TSX, I've noticed it's pretty much once they hit that 300, 400 million market cap, and that's kind of that. Pretty much, that's kind of a game over for quite a while, because then they start doing their financings, they start, all that other stuff, and that really, let's see. If one misses the webinar, are you talking about the Baby Unicorn Stocks webinar? If you miss that webinar, you're going to miss out big time, bigly. I think we will get the video. That's going to be a webinar, so you have to sign up with an email. You got to log in. It's not going to be on YouTube. We'll put the videos on YouTube a couple days later or whatever, but you're going to have to log into the webinar. So yeah, you'll be able to watch the playback, but definitely want to watch in real time because we might see some explosive action. Which one did we go? TBP. Okay, so we talked about TBP. Are you talking about Next Tech? Ooh, next. Let me take a look at Next Tech. I have not looked at that chart in a while. Since we're looking at old Wall Street Reporter stocks, old Wall Street Reporter. Let's take a look at Next Tech. Ooh, no, this thing is still in a downtrend. I mean, so we haven't worked with Next Tech since November. I put out an announcement way back in November, explained, hey, we're not working with them, whatever reason, I like the fundamentals of the company, or at the time I did. I don't know really what they're doing now. I'm not really up to date. So I've not really had any involvement with them. I don't know fundamentals, but the trend in this thing is definitely still heading down. I did mention it before. I'm not bashing the company when I talk about trends going down, breaking down, going up. I'm just telling you what it is. I mean, I tell you when some of our stocks that are clients, the trends break down. So, but yeah, this thing probably, I think this is going to go back to $1. I think it's going to go back to $1. At $1, you might see an interesting opportunity. I think this could be interesting. Look, the CEO is a very sharp guy. I think he could pull something out of the hat. But I think it's going to be probably when the stock gets to $1, you're going to see kind of like that moment when the light bulb goes off and says, "Oh, we got to do something different." Visby, I pointed out before. I go back later, looking very good. PKK. PKK. I'm not going to go through all of our stocks right now, but PKK kind of, I don't know what's going on here with PKK, to be honest with you. I don't know what is up. So it's a stock we introduced way back here at, I think it was 40 cents. No, it was 40 cents. 30, 35, 40 cents, whatever it was. So it's almost it's like a 9x. It's been a consolidation for the last, it's like a broken record, right? It's the last 5-6 months, 4 or 5 months, I should say, and it's below the moving average. It broke. What if you notice again? This moving average. The trend is your friend. Right now, the stock is, below this 275 really was the kind of a sell signal. It's made some turnaround attempts right here in this 225 range. It's made some turnaround attempts. There's a lot of pressure on it with the financing. There's a lot of short selling. I don't even know what to make of it. Look at this crazy action last couple. I couldn't tell you. Look at this. Look at today's action. It explodes and then closes on the low. The market action last couple of days just does not make any sense. I am hoping that it comes back. We haven't been able to do anything with these guys in months because they got this financing, so they can't do any promotion. So, basically our hands are kind of tied for the last 4 months. And of course, short sellers take advantage of it, and that's what's going on. The problem is the only thing with these private placements, I got to tell you, I'm getting really fed up with these Canadian private placements because these things just derail stocks. I think for the future we're gonna have to do something about this with the companies we bring on, because every time a Canadian company does a private placement, a financing, anytime they do a financing, it just derails the stock. It's really starting to piss me off. It happened with Nextech last July. Nextech last summer was, it hit, what is it, $10 Canadian, $8, whatever, $8 Canadian. Nextech could have gone to $15 last summer in a couple days. If they wouldn't have done that financing, it would have definitely done that. Just like you had Tetra, TBP, could have gone to 75 cents a couple of weeks ago if they wouldn't have done that financing. But look, companies, they need money. That's what happens. Fans, great example. Again, it's a stock. You're following our live stream for the last couple of weeks. On our Telegram, we put out the announcement right over here. Now, we did get faked out a couple of times. I have to say that. But this time it was 70 to 80 cents, breakout alert. That's why you got to subscribe to our Telegram channel. You could have gotten in at 80 cents. So let me click the link here. Join our Telegram. The link is in the video description down below. It's free. Fans United, this thing could have gone to $2. This was ready to. The momentum was building. It was like, it's like a locomotive. That starts going down. It's go. The train. It starts building, and then finally it goes, and then it goes full blast. It's hard to build momentum with a stock like this, and this financing that they did is definitely put a wet towel on it. However, it's actually hanging out here. It's made a pretty decent showing the last couple of days. So again, I had the catalyst word. You have a lot of catalysts here, which can move this thing higher. So we might see an interesting upside reversal in the next couple of days. We might see some interesting activity here. So the game is not over for Fans Unite by any means. We might see a move tomorrow to like $1.10. Again, this is speculation, because you really can't read into these charts. But I really think I think there's a good chance of this thing closing this gap here. Yeah, I think there is, look at this. This is a short-term chart. The stock has held on. So I think fans could close this gap, and then we could see, I mean, my target on fans is like $354. We introduced fans way back here, way back here. I think it was right here. No, here. When was it? I think it was July. I think it was somewhere in this time period. I think it was late July of last year, and then it went down. No, I think it was here. No, here. I think this is it. I think it was August. Anyway, I just remember the fans. We introduced it. It was kind of flat for like 2 months. It was kind of going nowhere. And then finally it hit kind of like this, inflection point. So we kind of, I think we introduced, I shouldn't say we introduced it early. I think it just took a while for the market to catch on to it. Sometimes the market is fickle, just doesn't get these things. But anyway, this thing is moving. I think we're going to see some action. There you go, another one. But bets, the problem with bets is this merger that's basically derailed this thing. Yeah, as far as I know, the client, we can't do anything because the stock is halted pending the merger. So it's dead money, 4 months. That's what it is. Yeah. Wow, this guy was in early, 20 cents. AIML and RHT. I don't know. I think it's actually they're different. I think they're quite different. I think it's a different model. If you look at kind of what AIML is doing, they're kind of more. Their client is more of the enterprise. Maybe insurance companies. AIML is kind of more. Excuse me. RHT is more of the medical practice. It's there's some serious distinctions. Also very different. It's completely different. Hopefully soon. Hopefully very soon. Logic. What a frustrating stock. Again, this is a stock that's been destroyed by Canadian financing. That's how I would describe it. I'm thinking companies shouldn't even do. I mean, this is like ridiculous. It's a stock we introduced last year at like $3. Hit a high of $14. You had some short selling, the market correction. They announced they're going to trade on the NEO exchange in Canada. They're going to do a financing, and the short sellers come out of the woodwork. And look at this. I mean, what a field day these guys have had. Of course, while the company's doing the financing, they're trying to do the listing, they can't promote the stock. They can't do live streams. They can't even put out news. Logic has not put out news in months during this whole period. They finally closed the deal. They raised some money. They're trading in Canada now. But this thing is still kind of, it's still kind of in free fall. I think we're right at the bottom. I mean, you can kind of see it starting to base, starting to flatten out. And probably, I think we've seen the bottom. Oh, what else? This chart looks horrible. Horrible looking chart right now. Again, look at the moving average. You could kind of see that would have been your sell signal when it broke below the 50-day at $9. But I think we're about to see the bottom in Logic. I think we're going to see the bottom. It's probably going to take about a month for this thing to really build a base. But then when it does, I believe we're going to see a $30, $40 stock. If you look at their comps, I mean, this is a real company. These guys are doing 40 million in revenues plus. e-commerce, mobile commerce, fintech in Southeast Asia, Indonesia, one of the hottest markets right now. So it should be trading at like a 500 million valuation. I think the problem was their margins, the profit margins. The market didn't like their margins. Now that they're growing their margins, they're expanding their profit margins. By the time the market sees that, it's going to be 4 or 5 months from now. And then the stock will trade at $25, $30, $40. I believe so. I think once they get the press releases out, it's going to be good. But look, that chart, you see the same thing I'm looking at. I mean, the chart looks like crap right now. We're probably at the base here. I mean, it's going to be maybe a week before we finally see it. But yeah. Yeah, I think what happens is basically, I think there's two ways of this happening. You probably have like short sellers, like a stock that is going up, exploding, that's got massive momentum, that's got massive liquidity. Look, I'll give you an example. I think this is what happened with Nextech last year. I think this is exactly what happened. I'm going to show you this chart. I'll tell you exactly what happened with this thing and the scam that is Canadian finance. So we started with Nextech way back August 2019, 50 cents American. I guess it was 80 cents Canadian. Okay, so you had a short. So we got some action going. The stock went to $2, $2.50, $2.80. And then you had the short sellers start coming out because there was volume. You had that fake report from these what is that guy, that scammer. You had some paid. It was a paid smear report. So in other words, the short sellers paid this alleged research guy, Hindenburg. It was very weird because I think Hindenburg usually goes, they do reports on big companies. Usually, they usually go after accounting issues. And here they wrote this report. Again, this is a microcap company completely out of their wheelhouse. And the report was just throwing mud. There was no substance to the report. It was just just like innuendo and just of course, investors panic, the stock collapses, takes a while to build it up. All of a sudden, then it starts moving up. A lot of momentum starts coming in. They do a great acquisition. And right over here, stock is $9. And I think what happened was you had the short sellers come out. I think you had this guy, Anson. I think it was, what's this guy's name? Is Moaz Kassam or something like that? Moaz. Anson Funds, I think, was the short seller. I think they paid off Hindenburg Research. I think they paid Hindenburg Research a couple of $100,000 to write basically this slanderous report. So stock is $9. Anson is probably shorting the stock. They're probably getting squeezed. Again, this is what I think happens. They start calling up, the investment banks who've done, financings for the company before. They say, hey, they probably, again, I'm just kind of, I understand this is the type of thing. I'm not saying this is what happened here, but I'm pretty sure this is what happens in Canada. So they call up the bank and they say, hey, do you think your client might be interested in a financing? Basically, the banks start going to the company, and then another short report comes out. This was like a really lame one. Again, this is a very lame one. Again, no basis of substance, just innuendo. Stock collapses. They do the financing here. They cover the short right over here, basically. And that's what happened. And that kind of, knocked the stock out for a couple months. Of course, we got it back on track, and that was it. But yeah, that's what happens with the, pretty much till about here, and then we are out of the picture since right about here, early November. And that is what goes on with these Canadian financings, basically. So it's just a way for short sellers to make money, as far as I'm concerned. So I agree with you 100%. Okay, so I think you have a very, very valid point. I think the problem with a lot of these Canadian companies is they're addicted to raising capital, and you just gotta be aware of it, pretty much. So, I think we're going to be in a kind of a different market going forward right now. So you're going to have to be more short-term focused. So, like, again, the baby unicorn stocks that we're going to have on July 20th, those are companies that are not really vetted. We're not really vetting them too much. I think they're interesting concepts. I think they have some things going for them. It may or may not work, but I'm pretty sure that they will have enough in them where you could see these things double, like in a week, if they get some traction. Beyond that, what happens? I don't know. They might go to 50. They might triple and go back. You know how these things are. I don't need to explain to you what happens with penny stocks, but yeah. Yeah, it's pretty funny. I think Anson should send us a bunch of cash, because they've made a lot of money shorting stocks that we've created liquidity for. Yeah. Let's see. Okay, so the Baby Unicorn live stream is coming up on July 20th. Click the link to register. It's free. So yeah, sign up July 20th. You might find a stock. You might make a quick double. We've definitely had those. But we're not, just so you know, just to be 100% clear, the baby unicorns are not the companies that really are it's more like an audition. The baby unicorn stocks really is kind of like an audition to be potentially go on our platform as a next super stock or whatever. It's purely an audition. It's like, what's that show? One of those, what are those singing shows? America's Got Talent, or what's the singer? Whatever. That's the show. What's the Next Voice? The Voice, whatever. I mean, they got 10,000 people to try out. Some of them are pretty good. And even if they don't make it onto the thing, some of them actually, end up making a lot of money. So I think we're going to see a couple of these things. Let me give you an example of what I believe can happen on our baby unicorn. Here's what could have been a baby unicorn. This would have been actually a baby unicorn stock. So Liquid Avatar, we introduced it on our platform. Actually, we announced it, or the word leaked out that it was going to be on our platform. It was 9 cents, and it went to 42 cents in 48 hours. So it was a quadruple. And of course, actually, it ended up going higher. And, they got the unlocking of the free trading shares now. So it's kind of the toilet. I think it's kind of building a base here. Hopefully it turns around. So yeah, I'm hoping that this thing kind of get some traction here. But yeah, it was, look, so that's basically what the baby unicorns is. It's an opportunity where to discover a stock. Some of them could be great short term. You might make a quick double or triple. But again, that platform is going to be purely an audition. And we're not going to be promoting, just so you know, to be clear, the baby unicorn stocks. It's a one-shot deal. It's an audition. Once they go on, but we're not going to be like, promoting them or doing anything with them beyond that, unless they might become a next suit, whatever. So it might be 1 out of 5, whatever it is, for whatever reason. So check it out. CYDY. Wow, a blast from the past. Let me just do that real quick. We'll wrap up on a couple more here. Wow, I haven't looked at this in a long time. So Cytodon, again, we introduced Cytodon way back, August 2019, 50 cents. Stock did nothing for a while. Then all of a sudden started moving. $10.01. $10.01 was the peak. That was our 20x, 2,000% return for anybody who got in at 50 cents. Moving average has been very accurate with this stock. Look at this. And look, this is what happens with these stocks. You got to be nimble. Anybody who tells you that you just put away these penny stocks, you lock them in the vault or whatever it is, they are not doing you any favors. Anybody who says that is just trying to create a bag holder. You got to be nimble. Look, some of these, I think when we, out of the next super stocks we have, I am sure that 1 out of 25 of these is going to become like, a $5 billion company at some point. Not one, maybe 1 out of 10, 1 out of 20 is going to really make it. The rest, they're going to have those crazy ups and downs. And, because there's, what happens is after a company goes that 10x, that 20x, 50x, usually that's pretty much it. I mean, that's why, again, when I do that webinar, I got to do an update of how we find these next super stocks and the whole philosophy, the idea of parlaying your money like Calvin Ting, the penny stock billionaire of Vancouver. You got to be like Calvin Ting. The name of this game is to parlay your money. You make 5x, you make 10x, you get out, because the odds of a stock that goes 20x or 50x going another 10x is infinitesimal. It might double from there, but that's pretty much it. So the risk reward ratio, either your edge evaporates. I like to have a 10 to 1. I want to have an asymmetrical advantage, 10 to 1. I don't know. We're gonna have a couple of companies. AIML is tomorrow. I gotta pull up the Trip live. Yeah, let me pull this up. Trip is doing some very interesting things. I think once investors figure it out, this thing could be over $1. You had this great momentum start to happen right here. June 16th. The stock looked like it could have gone straight past 70 cents. They announced the merger. I think investors kind of, that merger, I think investors don't quite understand it. I don't think they understand that what Trip is it's a deal machine. You're basically going to be betting on Todd, Bruce Linton, and Will, who was with Bruce at Canopy. So you're going to be betting on this dream team, the three musketeers, who are essentially, from what I understand, I think and they haven't really articulated it fully yet, but basically they're building this kind of a Procter & Gamble, Coca-Cola, whatever, a conglomerate of brands, companies in those sort of, what do they call it? The edgy ingredients, basically getting high, okay? So they're going to be it's going to be it's all going to be under an umbrella of brands of psychedelics, mushrooms, cannabis, CBD, and maybe even I don't know, whatever they legalize next. But it's going to be basically those edgy things, which are going to be all under this umbrella. And it's going to be pretty interesting. I think if Bruce really comes on as the chairman, I think that's when the stock could take off. So that's a catalyst to watch. I think if Bruce Litton joins right now he's a strategic, what is he? He's chairman of the advisory board, whatever. So he's involved, but not, because I know there's some like legalities or whatever. But if he really joins on, you're going to see this thing move. I think that's a catalyst to watch. And again, the market, once they kind of see beyond this merger is just a stepping stone for them. That's not the end of the game. Then you can see some interesting things happen. Okay. So Trip. Okay. Let's see. Let me just CYD1. Okay. So yeah, that's the idea. The idea basically is, you don't want to hold these stocks forever. You want to make your money. You want to make a 10x. You get your 10x, maybe even 20x, but the air starts to get thin. Once they get above that 10x, the air really starts to get thin. So yeah, you've had companies that have gone 20x, 50x, but those are unusual. I know we're definitely going to have that at 100x at some point, maybe even this year. I think it's going to be. I think I think the next 100 bagger, we're probably going to introduce it before the year is out. I think we're going to find that one. Let's see here. Oh yeah, let me pull up FCO. How could I not pull up FCO, a fan favorite? And then we're going to wrap up. I can't cover every stock here, but here we go. FCO. It's not coming. Here we go. FCO, it's kind of lost its mojo a little bit here. Again, it's below the moving average. I think it's going to kind of hang around here until they do this copper, this spin out, which should be pretty good. I don't know if maybe that's kind of the thing that's holding it down, because I don't know. I'm not sure what's going on here. Let's get Peter back on hopefully soon with an update. But this thing is holding on. I think once silver and gold take off, also the metals are down. Gold is looking terrible. Let me look at the silver chart. I haven't looked at silver. How do you pull up the silver? Let me look at this thing actually. What is this? Physical silver trust. Sprott. Yeah, the metals right now, I think we're going to see a couple months of a bit of a downdraft here. So that is going to weigh. That is going to weigh on the. It's going to weigh on the miners basically. That's it. So we'll be back later in the week with other stocks. Make sure you press the like, subscribe button, join our Telegram channel, click the link in the video description. Tomorrow, AIML live stream, 12:30 Eastern time. See you then. Thank you.